Hey, what's up, beautiful people? Today we have a red day recap. So we can't just go over the good days. We can't just go over the days when we make a big bundle of money. We got to go over the red days as well. Why? Because that's a part of the game, right? We can't ignore it, because then we would do it, or I can't ignore the red days, because then I would also be doing you guys a disservice, because I want to give it to you real. I want to give you the real side of this business, okay? If you follow me, you're getting everything, the good, the bad, the ugly, everything, okay? Because this business, it isn't all profits, bottles, models, Lamborghinis, mansions. No, this is the reality of this business. You're going to have losses, and there's nothing wrong with that. Okay. There's nothing wrong with having trading losses if you followed your plan, if you kept it within your risk parameters, right? So let's get into it. Euro NCD. This was the trade today. So Euro NCD, right now we're looking at a daily chart, okay? This is a daily chart. What is the trend on this daily chart? What is the market structure on this daily chart? Market structure on this is bullish, okay? Right here, you see the swing high level? We broke that swing high level on this push up. I want you to follow my cursor. See that push up right there? We broke that swing high level. What is that? That is what we call a shift in market structure, right? We had a nice shift in market structure. Then what did price end up doing after it took out these highs right here? After it took out that buy side liquidity. And also, one more thing. What did it enter once it took out this buy side? What did it enter as soon as it broke that high? I want you to answer among yourselves real quick. What did we enter? A premium marketplace. So the structure is bullish. The trend is bullish. But when we broke this high right here, we entered a premium marketplace. So what is price likely want to do in the near future? It's going to want to pull back, right? I don't believe it pulled back into a discount on the daily or below 50% equilibrium, but we did tap into this fair value gap. Oops, let me check. Let's see. I don't believe we did. It looks kind of, yeah, definitely. We didn't at 50% equilibrium, but we traded up into, or we took out this high right there. We took out that buy side, and then boom, we pulled back. Where do we pull back into? We pulled back into this imbalance, okay? That is a fair value gap bullish imbalance, right? And whenever price hasn't tapped into an imbalance, what is it? What is that? What's it going to be? It's going to be our draw on liquidity. That serves as a draw on liquidity. That's exactly what happened. Price took out these highs, boom, and then it draws down. It draws down into that imbalance and rebalances a portion of that price action. And then price bounces off of it. And now we have our swing low level confirmed, right? So market structure is confirmed bullish at this point. We had our shift, then our swing level that confirms it, okay? Now, yeah, one minus, which we've already basically just stated a second ago, is the fact that it didn't pull down into a discount. That would be best, okay? That would be best if it pulled back below 50% equilibrium. So if we would like to see it pull back below 50% equilibrium in that price range. That's best. It didn't do it, but we had it. It had that nice reaction off the fair value gap. We had our swing level. So I said, hey, good enough for me, right? So, but we can't really consider it an A+ setup for that fact alone. Okay, so now we're looking at a 4-hour chart. Still a higher time frame chart. Remember, 4-hour and up are what I consider higher time frame charts. So we are on the 4-hour higher time frame chart now. This is that daily fair value gap just displayed on a 4-hour chart now. Okay, so you can see price came down right here. It took out those sell stops, tapped into that imbalance. Boom, you get a nice big explosive move, right? And we have another higher time frame level in here. I marked it, or I pointed it out in my free Discord this morning as well. Link to that will be in the video description. 100% free if you guys want to join that. Here is our bullish order block on the 4-hour chart, and we're still playing around with that level at the current moment. That is our bullish order block. So I want you to think of it like this: the place where this move originated. So you can see this is where that selling first started at. And then we came down, boom, we purged this liquidity. We purged all this sell side liquidity right there on that move lower. When we tapped down into our daily fair value gap, boom, you get a nice big explosive move. That was where the selling ended. I want you to think of it like that. That is where the selling ended. That was the last leg lower before we had that nice explosive move to the upside. So where does big money, where does smart money, where do you think they want to get more of their position in? Do they want to get it, or do they want to buy up here when it's ripping up like this? They want to are they breakout buyers? No, they don't want to do that. Why? Because it's expensive. Okay, sure, it's bullish overall. We've already established that. We've already established that this thing is overall higher time frame chart bullish, but that's a premium marketplace. Premium, so short term, expensive. It's bullish, but right here, if you look at my cursor, short term, expensive. They want to get their positions at where that originated at, where that selling originated at, okay? Think of it like this. They buy red, sell green. Buy red, sell green, right? So it comes back down into where that originated at. That's why we mark the body, because that's where the bulk of the volume is. And it comes down, boom, it tests that level. That is our bullish order block. And it completely rebalances this price action right here as well. So we pulled back into a 4-hour discount. We tested a higher time frame level, our order block, rebalanced that price action. That's quite a lot right there that we've already got going for us. Okay, so it's looking real nice. And let's go, but that's not it. We need one more thing. Sure, you could play this 4-hour structure. Okay, you could absolutely play this 4-hour market structure right here. And guess what? If you did, you would likely still be in it. You would likely still be in this play, still letting it work. Okay, I didn't. I utilized my lower time frame to minimize my risk. But if you were to play this market structure on this 4-hour chart, likely you'd still be in it. You would still be sitting in it because like it's still bullish overall. It was just, for me, it's a matter of mistiming it. That's all we did. It was a matter of mistiming it. So we're going to get into why I hit it, because we need one more thing, or at least I want one more thing. Once we trade down into that higher time frame level, what are we looking for next? We're looking for our lower time frame shift in market structure, our lower time frame confirmation. That's what we want next, right? So I'm gonna put in some day dividers real quick. All right, there we go. So I think the day dividers, they kind of clean it up a little bit more. It helps us pinpoint those key liquidity pools better and all that good stuff. So Euro NCD, again, I'm still very bullish on this thing. I'm very bullish. And now we took out a key liquidity pool right here. Very soon, I think we could see a nice move on this thing higher. It was just a matter of me mistiming it. But I don't think our direction is wrong on this, okay? Because right now it's still bullish, okay? It's bullish until proven otherwise, okay? It's bullish until the chart tells me it's not bullish. The higher time frame chart, right? So I think it's just a matter of mistiming this thing, but here's where we ended up, or here's where I ended up getting this thing at. So we had this leg lower right here. This is that leg lower that retraced back down into our higher time frame discount and tested our 4-hour bullish order block. So we came down, and then boom, right here. What is that? That is the beginning of midnight New York. So a new day. Okay, here 1 second. So we had this, so you see we had this big leg lower. That was during Asian session. This big leg lower right here was during Asian session. Okay, and then we had midnight open up right here. Okay, and then right here we had a move lower. That was our Judas swing this morning. See that leg right? I want you to look at my cursor. See that big red candle right there? See how it took those lows right there? That was Asian session lows. It took Asian session liquidity. That was a Judas swing. And then what happened right after it did that? You get a nice move up higher, right? So that's why they call it the Judas swing. It's a fake move in the opposing direction of where price really wants to go, because see how this thing was just consistently grinding lower. It was consistently putting in lower highs, and it was consistently tagging these lows. And then we had this short-term high put in right here, and market participants that are looking for this trend to continue, it looks like it's going to do it right here. It looks like it's going to continue this same type of trend. They're probably thinking, hey, this is going to take out previous day's lows. It's going to take out that key liquidity pool, because look how close it got. It got close, and then boom, it just completely changes direction. That's a Judas swing. And then what happened? We pulled back into a discount within that price range right there. And then that's where we got our really nice move. That's the move that really piqued my interest, and I knew right away this was my play. This was my setup. So see how we got this fair value gap confirmation right there? We had to move up right there, but we didn't have that fair value gap in there. We didn't have that big explosive move like we had right here. So I'm going to note that for you. That was our confirmation right there. So 1, 2, 3. In between that, nothing but candle. There's our fair value gap confirmation. Really strong move right there. Really strong shift in structure right after taking Asian session low liquidity. Okay, so London session, we were consistently grinding up higher, which is nice. As I've said before, it's best if you have the influence of London session backing you. We had it. We had the influence of London session this morning. And then coming into New York. We had this pop right here, but this move lower right here, but that wasn't during New York session, so I had to hold off on it. But then we came back down into it, into this fair value gap, into this higher time frame order block, right into New York kill zone, so 7 o'clock a.m. And that's when I got in, when we tapped back down into that order block, okay? So what was my PT on this? I wanted to target previous day's highs because that's a key liquidity pool. That's buy side liquidity resting above that level. So that's what I wanted to target. And my stop on it was right here underneath this low. So see that? So that's where I kept my stop. And again, wanted to tag the high. So as you can see, I mean, it was a good, really nice risk reward play. Really nice risk reward on this thing. Higher time frame trend. We had our confirmation. It pulled back into a discount marketplace. See that? So it pulled back below. We pulled below 50% equilibrium. So we were in a discount marketplace as well within that price range that was created during London session. And what ended up happening, it just chopped around for a bit, and then eventually sold off and attacked those sell stops, aka being low of day. So what can we learn from this? What could we have done better? Well, overall, it was a solid setup. I mean, we're trading with the higher time frame trend. We took that previous session, we took Asian's liquidity. We had a strong shift in market structure right here. Fair value gap confirmation, pull back into a discount for us. We didn't even tap previous day's highs yet, so that's good as well. That's also a bonus. I like when that liquidity is left untapped. It's higher probability. So we even had that going in our favor. Now there was one thing on the 4-hour chart. If we go to that, let me clear off this one right here, this day divider. We can see it a little bit better. We did have a 4-hour bearish fair value gap. So this is worth noting and putting in the notes right there. See that? There was that bearish 4-hour bearish fair value gap that was created on that push lower right there. What did price end up doing? This morning, it popped up and it completely rebalanced at 4-hour price action. And then that was the end of it. After it rebalanced that, what did it do? It looked for what next? It looked for that liquidity. That sell side liquidity is what it ended up attacking, aka my sell stops, right? So that's what it ended up attacking right there. But I mean, that's really the only thing I could see on this thing. I would say most definitely that contributed. That was probably a big reason why we didn't get this follow through. But even with that, having that 4-hour bearish fair value gap, I still like to play. I mean, this wasn't a shift in market structure either. Did we break a swing low on that move lower? Did we break a swing low? Do you see any swing low in there on that move lower? No, it's just a pullback. It's a pullback into a discount within that range. And the higher time frame chart is bullish still. So that's the only thing that I really see on this. But other than that, I mean, it was a solid play, solid setup. And if I was to see something like this again, I would take it again, without a doubt. That's just part of trading. Sometimes your setups, they're not gonna work out. They're not gonna have follow through. That's part of it. You gotta accept it, take it on the chin, keep it moving, show up again tomorrow, and repeat the process. Keep taking your setups, keep executing. And if you have a good system, you have a true edge, the chips will fall as they may. Trust it.